Gold is holding steady today, but there's a lot going on underneath the surface. Rising tensions in the Middle East, and traders bracing for a key Fed announcement tomorrow. Let's break down what's actually moving this market. Spot gold is barely budging this morning, sitting right around 41.68 an ounce. US gold futures for August delivery are up a bit more, rising about 0.3% to around 41.80. This comes after gold touched a two-week high yesterday, thanks to Friday's weaker-than-expected U.S. jobs report, which had markets scaling back their expectations for an imminent Fed rate hike. But that optimism is already cooling off a little. Peter Grant, a senior metals strategist over at Zaner Metals, made the point that the Fed still looks locked in on getting inflation under control, meaning interest rates are likely to stay higher for longer than some traders were hoping. And the numbers back that up. According to the CME FedWatch tool, traders are currently pricing in about a 60% chance of a rate hike in September. So the rate cut relief rally from last week hasn't fully translated into a shift in what the market expects going forward. All eyes now turn to tomorrow, when the Fed releases the minutes from its June meeting. Traders are going to be combing through that document line by line, looking for any hints about how officials are really thinking about inflation and the path for rates from here. Now, over in the Middle East, tensions are escalating. Two tankers were hit in the Strait of Hormuz, and Iran has said there won't be any further peace talks unless the U.S. stops threatening to restart the conflict. Oil prices ticked higher on that news. Normally, you'd expect rising geopolitical risk to be a clear tailwind for gold, since investors tend to run towards safe havens when tensions spike. But here's the catch. Gold tends to struggle when inflation worries keep interest rates elevated, because higher rates make non-yielding assets like gold less attractive compared to interest-bearing alternatives. So right now, you've got two forces pulling in opposite directions: geopolitical risk pushing gold up, and rate expectations holding it back. Let's shift to central bank activity, because this part is important for the bigger picture. China's central bank has now bought gold for 20 straight months in a row. By the end of June, their gold reserves climbed to just over 75.4 million fine troy ounces, up from about 74.96 million the month before. That's a pretty clear signal that China continues to steadily build its gold position month after month, regardless of short-term price swings. And there's another interesting development out of Asia. Hong Kong just launched a central clearing system for gold, and it's also bringing back gold futures trading. This is part of a broader push for Hong Kong to position itself as a major regional hub for gold reserves. Something worth watching if you're tracking how the gold market is shifting geographically, with more infrastructure building up in Asia. Now let's run through the rest of the metals complex. Silver actually moved in the opposite direction from gold today, dropping about 1% down to around 61.48. Platinum, on the other hand, is up 1.2%, trading near 1650. And palladium gained about 0.8%, sitting around 1278. So here's the takeaway. Gold is essentially in a holding pattern right now, caught between rising Middle East tensions on one side and sticky, higher-for-longer rate expectations on the other. Tomorrow's Fed minutes could be the next real catalyst, one way or the other, and in the background, China keeps quietly stacking gold, while Hong Kong builds out new infrastructure to compete as a global bullion hub. That's the setup heading into the next 24 hours. I'll be watching those Fed minutes closely tomorrow, so make sure you're subscribed for the update. Thanks for watching. I'll see you in the next one.